I spoke with the Dixon management, and what they said is that, if anything, actually what has come through is positive for their business. So, as the finance minister said, the basic customs duty on open cells has been reduced. They are setting up a display manufacturing capacity. We speak with them every quarter, and that's been something which the market is looking forward to. So, actually, it helps them. And they also said, the Dixon management has said that even for mobile parts, there are some reductions which have happened. And that is also actually positive. So, unaware where the stock was seeing a bit of a swoon, but you just see what's happening now. It's about 1,200 rupees recovery from the lows of the day on Dixon already. So it's actually almost flat now on Dixon. So I think, initial kind of knee-jerk reactions starting to get reversed. Even actually for insurance companies, you look at the price reaction, right? HDFC Life was down 7%. It's down 2.5%. Because, the dependence on the old regime is about 5 to 7% of individual new business new premium.
Prashant,
so a lot of it, there is excessive move, and then it kind of gets moderated.
I think what we have to keep in mind is today there isn't much volume. And perhaps that's why you're having these rather eccentric or volatile moves, because the volume perhaps is not like on a normal day. Remember, it is a Saturday, and foreign funds are not in the game. Well, actually, I want to look at it this way. Mr. Khara, you just correct me if I'm wrong. What could have gone to capex 1 trillion less because, the increase is only 10%. And that 1 trillion actually is gone into the pockets of the taxpayer, right? Especially the small taxpayer, up to 12 lakh. Which means more people can spend, more people can take loans, retail loans, for instance. So, and normally the Reserve Bank's thinking is, when fiscal deficit is kept under check, they are more courageous to cut rates. Because you don't want fiscal looseness and monetary looseness together. If the fisc is tight, normally the central bank cuts rates. This is their normal thinking. So do you think that this is a boost for retail loans?
So I think, it is certainly a boost to the retail loans, because when it comes to the ability to repay, they have got a better ability to repay. So that is a positive. But, when it comes to decisions relating to the policy rate cut, etc., they have got multiple other factors which they have to evaluate. And perhaps herein, even if the policy rate comes down, whether the interest rate structure will allow the reduction will be a function of the liquidity. If at all, unless and until liquidity improves, I think my apprehension is that the ability of the banks to cut the interest rate would be little constrained.
Fair point. Well, I agree with you. Liquidity also is something which the Reserve Bank has been giving. So hopefully, going forward, we will see more such steps from them. Mr. Khara, thank you very much for being with us on such an important day. Sunita Reddy, the Managing Director at Apollo Hospitals, is also with us. Sunita, thank you very much for your time. Your first thoughts, there was a mention that medical tourism will be promoted. What have you made of the budget?
I think it's a fantastic budget, because what is good for every Indian is good for healthcare. And the first part of it, of course, lowering of personal taxation is something that is going to put more disposable income in the hands of many more Indians. And moving on, this will give them access to health insurance products. The 100% FDI in insurance, while it might not show on the stock market, I see it as a very positive move, because bringing in more liquidity will give insurance companies the ability to have higher risk pools, and therefore create products that the middle class can access. We have seen private insurance and insurance products grow by 25% in the last 3 years. This is the best way to access corporate healthcare. So certainly a positive move. The second is the focus on oncology and cancer. The incidence of cancer is growing at far more than 7%, which is reported, because it is not detected early. And with this focus, the dual focus, the first on creating daycare centers, they've mentioned 200 chemotherapy centers, which will cover all of the districts in the next 3 years. I think it's a great move. What needs to be done is to create a hub and spoke model and use AI and connectivity to make sure that we cover large populations. It would have been fantastic if we could have done this even on equipment that's needed for radiation. Currently, we pay between 28 to 36%. So a customs duty, a reduction on oncology treatment equipment would have been, would have been very comprehensive for treatment of cancer patients. The third aspect is clearly the Heal in India, which you mentioned. And Heal in India, Heal for India, all of this is good. It's a $100 billion opportunity. And I believe that we have the capabilities in place. If you combine this with the skilling and the addition of 10,000 more medical seats, moving to 70,000, I think we can set up a very strong healthcare system that not only heals India, but heals for the rest of the world. And by doing so, like I said, it's a $100 billion opportunity. I think we will earn foreign exchange, we will provide more jobs, and we will create a healthier India. So to me, the budget was definitely a step in the right direction.
Well, absolutely. And there was a mention of that in the speech as well, that promoting and enhancing medical tourism is also one of the focus areas for the government. By the way, look at the intraday charts of insurance stocks all over again. It's all happening right here because of a very sharp reversal playing out now on stocks like SBI Life, HDFC Life. Many of them have bounced back very significantly from the lows. Big uptick coming through as the market settles down and digests this. By the way, folks, I was doing rough back of the envelope calculations, trying to figure out how much do you save in this, new era of the new slab. So very rough. I mean, for someone who is earning 15 lakh rupees, my rough calculations show that in the earlier, this is the new concessional tax regime, but with the old tax slabs, that person would have had to pay 1,40,000 rupees in tax. Now the liability is coming down to about 1,05,000. So roughly speaking, 35,000 rupees of savings for someone who's earning 15 lakhs. Again, I'm not taking surcharge and cess, too many things going on at the same time. But roughly speaking, that's the saving that we're talking about.
No, the finance minister herself gave us those calculations. Those
lakhs.
People earning 12 lakhs will save 80,000.
Yeah.
Those earning 18 lakhs will save 70,000.
Yeah.
And those earning 25 lakh will save 1,10,000.
Exactly, because for those who are earning 12 lakhs, the rebate itself is coming in.
Yes.
So it becomes nil. I mean, the rebate, which used to be only 7 lakhs, has now gone up to 12 lakh rupees with these new tax slabs. But anyway, it's anyone's guess. Now, where will this money be spent? Will it go in SIPs? Will it go to, buy new clothes? Stocks like Trent are surging about 7%. Will it go for travel and tourism and holiday? Or will it go in buying maybe better health covers? Because the market is worried on health insurance. And they're not being covered, with more people perhaps moving to the new regime. But there is generally higher disposable income. So could that benefit? Anyway, let me take that question to Nilesh Shah, who's joining in as well. Nilesh, the markets become so polarized today. All things economy are selling off and all things consumer are moving higher. But as the dust settles on the day and the budget documents, how do you think we are poised and, what next for a market that's been, hurting for several months now?
So while it is fashionable to say that market has been hurting for last 2 months, last 5-year return of market is 20% plus. So if you have given so much of profit, obviously there will be a consolidation or correction. This budget has clearly shifted focus from pure investment to also boost for urban consumption. And now that roti kapda makan is secured for most of the people, focus will be shifting to education, travel, entertainment, consumer durables and stuff like that. And that adjustment is happening in the market. More importantly, from a valuation point of view, capital good companies were pricing in price to vision ratio. So there is some amount of deceleration there. Consumer stocks, they normally trade at a higher valuation, but compared to their historically higher valuation, they were at a discount. So there is some amount of investor pulling over there. So we are seeing a distinct shift from infrastructure investments to consumption, both in the budget and hence in the market.
By the way, the market itself, it's not just life insurance stocks, the market itself is pulling back from the lows. Should keep that in mind. The Nifty's cut is around 60 to 67 odd points. That's the recovery that I'm talking about. Apart from life insurance, you've got stocks like Bajaj Finance moving higher. Of course, auto stocks are up. Aisha, for instance, is gaining more ground. And the Bank Nifty is also trying to reduce its losses.
You're right. Bank Nifty and mid-cap index were down about 1.5% at one point in time. Now down almost like 0.5%. So it's a fairly decent recovery that we've seen. Zia Mody, you've been with us for quite a bit. Thank you very much. But any last thoughts that you've heard, everyone? IFSC investments, anything from an investment point of view that you want to leave us with?
I think one will have to look at how the promotion of GIFT City takes place, Lata. I think there will be a lot of movement there. I think one thing that I focused on was the concentration that the FM gave to the MSMEs, given that, they apparently constitute 36% of our manufacturing and 45% of our exports. And that led me to think about what is the boost she has given to the skilling sector, because we have Indians, but we need to have employable Indians. And I think there also the government has tried to do what it can in skilling. And in addition, I don't think anyone has mentioned the AI part of it, where the government has basically said that they're going to set aside a large amount to train people in AI for the Excellence Center. And I think that is one where both the country, the startups, and the foreign investment should converge well. And it's a new area for us. I think all in all, stable budget. No surprises from a foreign direct investment point of view. Some over-regulation by some regulators, which make it more difficult for FDIs and FPIs. But I'm assuming that will get sorted out at the back end. All in all, I thought it was fine.
Thank you. Thank you very much for that, for those wrapping up thoughts, Zia. And actually, under the FSDC also, they have, they are looking at an inter-regulatory committee, which perhaps will take out these extra compliance. Prashant, you wanted to say something? Go ahead, please. Yeah, Prashant, I think you're on mute.
Sorry, before Zia Mody goes, and unfortunately Kanabar is no longer there, but Nilesh Bhai is there. So a lot of things have been said about Gift City and the positives. Yeah. In fact, I would say, despite my overall very positive view on the budget, and in fact, I believe it's the best budget in a long time, it did nothing to address the core problem of Gift City, which is that under Section 9A of the Income Tax Act, which Nilesh Bhai is very familiar with now, fund managers like me or my peers who are seated in Singapore or Hong Kong or London, who are managing FII funds, are effectively prevented from relocating to India, to Gift City. So you can relocate a few funds and make it like a mini Mauritius. But unless the fund managers are allowed to relocate, Gift City can't be made into the kind of city that our Honorable Prime Minister Modi ji has dreamt it to be. Just to complete the thought, metaphorically speaking, to grow a tree, it is not sufficient to have good soil, water, and sunlight. Most crucially, you need the seed. And the fund managers and investment teams, their investment managers, are the crucial seeds to grow those trees, metaphorically speaking. So I must add that all this excitement around Gift City results into nothing but zero unless that issue is addressed.
I'm glad you raised that, Prashant, and I want to go to Ashok on this because we were debating and discussing this earlier as well. What clarifications come and have it on the relocation part. That and one more thing, Ashok, I remember this was a very big ask earlier. Basically, some of the non-bank units that are operating in GIFT, they wanted to get parity with the bank branches, the bank units in GIFT, in terms of issuing instruments like ODIs to overseas investors. That was a big ask. I don't know, I've not seen it in the fine print so far, but your thoughts on some of the issues that Prashant has also raised.
No, you're right. I mean, I have now seen the detailed fine print on IFSC, and the amendment required for Prashant to relocate to India is still missing. I mean, it goes back, his and my discussion goes back to many, many years when we first made this request to the government. But sorry, Prashant, there has not been an amendment, and the rules still remain rather rigid, which effectively means that existing funds operating out of Singapore, most of them are now from Singapore, not so much from Mauritius, are finding it difficult to relocate their fund managers. You can relocate the fund, but if you can't relocate the fund manager, then who's going to manage the fund? And I think sooner or later that change has to happen. Having said that, there is an interesting change that they have made in the Gift City rules, which is what they've said is, if there are two related companies and you have a treasury company located in the Gift City, historically, when there is a transfer of money from one related company to another related company by way of a loan, it's deemed to be dividend in the hands of the receiving company. What they have now clarified is that if the giving company is based out of Gift City, then any loan given by that company to a related company not based in GIFT City is not subject to deemed dividend tax. So that's a very positive step forward in terms of enabling large corporates to set up their treasury business, certainly in GIFT City, both domestic as well as global companies,
right,
without causing a deemed dividend tax. But to the point that was made by Prashant, we probably have to wait one more year.
And what about ODIs, Ashok? What about ODIs? Because some of Nilesh Bhai's peers, for instance, I mean, Kotak has a unit. Many other Indian entities have set up non-bank units in GIFT, and they all want to be able to do the business on ODIs as well, which I think the tax benefits are restricted to the bank branches right now. Did you see anything there?
No, unfortunately, nothing there either.
Okay.
No change in law. But just two other points that I'd like to make is coming back to MSMEs and Zia's point that there is a lot of focus on the middle class. I think we are missing the point on the number of new opportunities in terms of increasing the limit for both micro enterprises as well as small enterprises. You know, I think a lot of microfinance companies and unsecured lending, stroke even secured lending businesses with small ticket loans have gone through an immense amount of stress in the last 6 months. You can see the delinquencies, you can see the challenges in collection, and therefore you can see that several companies are either reeling under pressure if they're listed, or many that had filed for DRHP are not getting listed because of the environment. Increase of limits over there and providing insurance on a larger base, I think, is a very positive step. Government is giving an assurance to more and more lenders to say, you can continue the business. And we know that there is some pressure at the lowest end of the economy, but we will cover you with insurance by increasing these limits. That's a very positive step.
Got it.
On insurance itself, on the FDI side, I think there is a very positive movement. I mean, we have 22 odd companies that
Mr.
are...
Wadhwa, sorry. I just wanted to, a point taken. I just wanted to clarify something. And I don't know if you've seen this. This is the point about bringing clarity in income on redemption of unit-linked insurance policy. And the wording is, it is proposed to clarify that the profit and gains from the redemption of unit-linked insurance policies to which exemption under Section 10D does not apply shall be charged to tax as capital gain. Is this, the way it is worded, does it look like it perhaps is retrospective? I mean, just your sense. Redemption from here on, basically.
Yeah, so effectively, if the redemption happens from today, it does not matter when you invested. Therefore, if you invested historically, but you redeem today, the language seems to suggest that it would be, I haven't read that still in the document. So my apologies that I can't provide you greater clarification, but if that's what it reads, then it means in some sense it's retroactive in nature because past investments, if redeemed from today onwards or whenever the effective date is, shall become subject to tax.
So this is like what they did to debt funds last year when grandfathering was removed? Something similar?
Something similar.
Okay. I mean, that is... Zia, you want to comment quickly on this? Any thoughts? Okay. Okay, I think you're on mute, but I think you're saying you're not seen it.
I've not seen it.
I've not seen it. Okay, all right. We'll have to, I think, clarify with our with Sapna, our reporter in Delhi, whether this is what they mean.
I'll have to run to the money control interview that I have right now.
Prashant, carry on. Let me just actually toss it across to Shireen now, who's at the CIA budget headquarters with the panel of guests there. Shireen, over to you.